Hey everyone, it's Mike from Orderflows and welcome back to my channel. In today's video, I'm going to be talking about points of control, specifically the POC Shadow tool that we've added into Orderflows Trader 8, which is the latest version of Orderflows Trader. Now, just really quick, if you enjoy the channel, enjoy the content that I put out, be sure to hit the subscribe button and as well as hit that notification bell so anytime I post a new video. Now that we've got Orderflows Trader out and released, I'm trying to get videos out on how to maximize the tools in your trading. So, be sure to hit that notification bell so whenever I post a new video, you'll be notified of it. All right, so in order flow, right, specifically on the footprint chart, the point of control is the price level in the bar with the most volume. Every bar has a point of control, and sometimes it means something, other times it doesn't mean anything. Think about it, right? What is volume, right? Well, volume is important in the sense of where it appears in the bar. Generally speaking, volume tends to be concentrated somewhere towards the middle of the bar on average in normal bars. But again, there's going to be instances where points of control appear at certain areas of a bar. And, once you start having those point of controls appearing at certain areas of the bar, generally speaking, the next level of volume is going to appear there as well. So you're starting to get clusters of volume appearing. So, in our years of analysis, we've determined that points of controls, where they land in a bar, are important. And to make it useful to traders, what we've done is we've added a tool on the Orderflows Trader 8 called POC Shadows. So let me just pull up the indicator settings here real quick. And you're going to scroll down into the POC Shadows right here, enable POC Shadows. Now, the thing with the POC Shadows is it's really meant to be a reversal indicator for finding potential reversals in the market. Basically, what's happening is a market's poking up into a new high, swing high, or new swing low. It's sort of rotating around. Heavy volume is trading. Obviously, the point of control is coming in at a certain area, and then the market starts moving away from that area, right? In a sense, it rejects that area, and it's important. So again, there is a swing filter that's by default enabled on there. To disable it, you could simply click there to make it disabled. And again, swing filter is linked up here to the global setting of swing filter. The default is 5, which is good enough for most traders. Again, depending on the market that you're looking at, maybe you want to adjust it a little bit shorter or maybe a little bit longer, but 5 is a good starting point. So then you just hit apply, and you're going to see it appear on your chart. Okay, so what am I looking at? I got a euro currency here today with CPI. But you can see here, right, here's your reversal here. Short, red, long, blue. All right, there's another long right here, one there. Today again, today was CPI. That's why we got that big spike up. I'd love to say, well, some people, unscrupulous traders will say, well, look, yeah, you got the signal here, then you got that big run up. But again, you're not gonna. I don't advocate for trading right ahead of the CPI number. But you can see here, even in the night session or early morning, 4 a.m. Chicago time, you're getting some moves there. Just going back to the previous day, there's a nice long here up to that short. And again, if you're trading a reversal, okay, I can't stress this enough because sometimes, I get emails from traders saying, oh, you know what, I took this short here and then the market went up and stopped me out. Well, if you're trading a reversal, well, okay, one, you have the order flow in your favor, okay, because you have in this case, the POC tool indicating that, hey, you know what, there's a potential reversal here. You need the follow through, right? The next bar's got to start trading down, or if it's a bullish reversal, the next bar has to start trading up, right? Because just because you have the order flow conducive in the sense of it's a bullish sign or a bearish sign, you still need that follow through, okay? Because if you're looking at it, especially on a time-based chart, that the market's trading, within that time period. This is a 1-minute chart. After 60 seconds, boom, the bar ends. Okay, but when the next bar opens, you want to see that continuation. Okay, and again, if you're trading some of the more volatile markets, gold, for example, using the look back filter of 5 might be good enough. Here was a nice bullish signal down here. There was a nice bearish signal here. Again, you could make the look back longer, or you could make it shorter. Here's one that just went side, and then there's that CPI number. Just you can see even here, 6 in the morning, some signals. Now, equities, okay, the equity markets nowadays are going berserk. Every day it's Trump announces tariffs. I mean, I don't understand why every day Trump opens his mouth about tariffs, the market goes berserk. He's been talking about this for months, but nevertheless, if you're looking at some of these equity futures, start with Dow. For me, I think if you're going to trade, you should trade markets that aren't as going to give you a big heart attack. Here you can see Dow, here's a signal here, but these bars are quite massive. These are almost 100-point bars, which is very big. This is on a 1-minute chart. How can you get around it? Well, if you're trading, say, a range-based chart, problem is the market's going to move very fast on a range-based chart. But again, you can get some decent moves. Imagine you shorted this one here from, after this bar closes, next bar starts trading down, we'll just call it 690 all the way down to, the 400s where you get a bullish signal down here. Say you covered here 490, that's a 200-point move. But again, that's on a 1-minute chart. Honestly, I mean, for me personally, if I was going to look at equities, I'd be on a shorter range chart, a 30-second chart. Generally speaking, you're most likely going to get a lot of the similar signals, but to me, it's just a little bit manageable instead of looking at bars that move 100 points. It's a little bit more manageable, and again, even though you got a bullish signal here, the next bar has 0 follow through. So that's not a trade that you would be looking to take. Question I get a lot is, what about M&Q? Well, honestly, I think unless you got deep pockets and a good constitution, stay out of M&Q. But let's pull up an M&Q chart and take a look. To be honest, I mean, there's 40 decent futures markets out there beyond M&Q, MES, YM that don't have that sort of volatility. But again, I'm not telling you don't trade it. If you're a glutton for punishment, which apparently some traders are, by all means trade it. But I just want to show you here, problem is M&Q, there's a lot of movements. That's why it's taken a little bit of time for this chart to come up. And again, I'm looking at a 30-second chart. Okay, a 1-minute chart on M&Q is going to be, in my opinion, and I said, unless you got a big risk window, it's not something you're going to want to trade, right? But again, I don't want to be telling people don't do this, don't do that. If you're able to make it work for yourself, by all means. You can see right here, there was a nice bearish signal up here. Again, this is a 30-second chart. But on this 30-second chart, you're talking about a move from, we'll just call it roughly here, 690 down to 590. Okay, these are big moves in M&Q. If there's any bullish signals here, before the cash open, small ones here, bullish one here, bearish one there. That's right ahead of the cash. Again, a couple minutes before, about 7 minutes before the cash open, a bullish signal. Another one right on the cash open, bearish one here. But again, this next bar didn't go lower. So again, even though you have the POC shadow, the bearish POC shadow, the next bar has to start trading down if it's bearish, just as if it's bullish, the next bar has to be trading higher than the high of the bar with the signal. Okay, to me, that's just basic. You want to be trading in the direction of the market, not going against the direction of the market. Right? That's the whole point of order flow, right? Quote, trading on the side of the institutions. Well, if you're getting short, but nobody else is getting short, why would you want to be short? Okay. So, again, that's the new tool, one of the new tools. We've got a lot of new tools on Orderflows Trader 8, but this is one that is dear to me. I did earlier this year, I did a special training workshop on some setups. So people that attended that workshop were aware of the setup long before we even added it into Orderflows Trader 8. Okay, so anyway, guys, thanks for watching this video, and I'll see you guys on the next video. Take care.